All right. Welcome in, everyone. Kicking off another deep dive here.
Yeah.
And today we're going to be, we're diving into something that's pretty important for a lot of folks out there, especially those thinking about their, their golden years.
Retirement.
Yeah, exactly. Retirement and how to make that money last, right?
Absolutely.
So we're looking at this thing called the EquiTrust MarketForce Bonus Index Annuity.
Okay.
And it's one of those financial products that, it sounds a little complex at first glance, but we're going to break it down.
Yeah.
Now, some of you might already know about annuities in general, right? It's that contract you have with an insurance company.
Right.
You give them some money, and then, down the road, they give you regular payments.
Exactly. Often in retirement. Yeah.
Yeah, exactly. Helps keep that income stream going, right?
Right. Right.
But what's interesting about this MarketForce annuity is that it's trying to give you a little more, like they're saying, hey, we want to give you a chance to benefit from how the market's doing, but we also want to protect you if things go south. Right?
Yeah, that's the big sell here, right?
And they even throw in, like, they dangle this 8% bonus in front of you.
Oh yeah, that 8% definitely grabs your attention.
Yeah, for that first year.
It's a head turner for sure, but like most things in finance, you got to dig a little deeper.
Yeah, there's always more to the story.
Always more to the story, exactly.
So let's unpack this thing.
Yeah.
And see if this MarketForce annuity actually lives up to its name.
All right, let's dive in.
Okay, so you mentioned that 8% bonus.
Yeah.
That's eye-catching,
I
right?
for sure.
But I guess the first question is, how does this thing actually work?
Right. Well, the core of it is this idea of indexed accounts.
Indexed accounts, okay.
Yeah, and it's not just about, putting your money in the market in a general way.
So you're not just like riding the roller coaster of the S&P 500 or something.
Exactly. It's more strategic than that.
Okay.
These indexed accounts are linked to specific market indices. Yeah. The S&P 500 could be one of them, but there could be others based on, different sectors of the market.
Okay.
Different strategies. So there's a kind of a thought process behind how these indices are chosen.
So there's like a strategy behind the scenes, kind of picking and choosing which parts of the market to follow.
Absolutely. And the key is that the performance of your annuity,
okay,
it's directly tied to how well those chosen indices perform.
Okay, so that makes sense. So it's not just a general market thing.
Right.
There's a specific, like almost like a portfolio in a way built into this thing.
You got it.
Okay, but here's the big question for me.
Yeah.
Right?
Yeah.
What happens if the market takes a nosedive, right? We see one of those big corrections. Everyone's talking about a recession.
Yeah.
What happens to my money?
Right. That's where this downside protection piece comes into play. And it's designed to give you some peace of mind.
Okay.
So think of it like a buffer,
Okay.
If the market goes down, your principal is protected.
So I'm not losing my initial investment.
Exactly. You're not going to lose what you put in.
Okay.
But on the flip side,
Yeah.
if the market goes way up, your gains might be limited.
Okay.
There might be a cap on how much you can actually earn.
So it's like a trade-off then.
It is a trade-off. It's about finding that balance.
Okay. So you're giving up some potential for those huge gains.
Potentially, yeah.
But you're also getting that security.
It's security, the peace of mind.
Peace of mind.
Exactly.
Okay, so it sounds like this is maybe geared towards folks who are a little bit more risk averse.
Yeah, they want some growth.
Yeah.
But they also want to, sleep well at night.
Exactly.
Not be checking their portfolio every 5 minutes.
Yeah, no, not riding the roller coaster.
Right.
Okay, now you mentioned these indexed accounts, right? And I know you said there's different types.
Yeah, there are some choices within those indexed accounts. So you mentioned this term earlier, rate buy-up account.
Yeah, rate buy-up, yeah.
Now, those offer the potential for higher returns.
Okay.
But there's a little cost involved.
Okay.
There's an annual fee.
So it's like you're paying a little extra for the chance to potentially win bigger.
Exactly. It's like, you're buying a ticket for a bigger raffle prize.
Yeah, right.
And then on the other hand, you have the non-fee based accounts, which, they offer a more conservative growth potential.
Okay, so within these index accounts, you can kind of tailor the level of risk you're willing to take.
Absolutely.
Okay. All right. So we're starting to get a picture of how this thing works.
Right.
But let's talk about life happening, right?
Yeah.
Because things happen.
Things happen.
And sometimes you need to access some of that money
Yeah.
maybe before you actually hit retirement, right? So how flexible is this MarketForce annuity?
That's a great question, and it's an important one.
Yeah.
Because we never know what life's going to throw at us, right?
Right.
So, one of the key features here is this 10% free withdrawal provision.
Okay, 10%.
10% after the first year.
Okay.
So you can access up to 10% of your accumulated value each year
Okay.
without any penalty, without any surrender charges.
Okay, so that's a nice little safety valve there.
Exactly. It's like a little bit of breathing room,
Yeah.
knowing that you have access to some of those funds
Okay.
if you really need them.
Now, when you say 10%, like, is that something that people should factor into their financial strategy?
Yeah, that's a good point.
Like, should they be thinking of this as like a backup emergency fund?
I would say it's more about flexibility within the annuity itself. I wouldn't necessarily recommend relying on it as your primary emergency fund.
Oh.
A dedicated emergency fund is still crucial for those unexpected expenses.
Yeah, makes sense.
Car breaks down, you need a new roof, those kinds of things.
The surprises.
Right, the surprises, exactly.
Yeah, so this 10% is more about, like...
It's more about, having a little bit of wiggle room within the annuity itself.
Gotcha.
Maybe you need to make a big purchase,
Yeah.
or you have an unexpected medical bill, something like that.
Okay, so it's there, it's accessible,
It's there.
but it's not necessarily something to bank on.
Right, it's not your go-to rainy day fund.
Gotcha, okay.
But it's good to know that it's there.
Now, what happens if you go over that 10%?
Right, well, if you withdraw more than that 10% free limit,
Mm-hmm.
then you could be subject to surrender charges
Okay.
and market value adjustments,
Okay.
which could potentially reduce your final payout.
Okay, so there's some consequences for tapping into it too much.
Right, there are some guardrails in place.
Okay, all right. So flexibility within limits.
Within limits.
It's designed to be a long-term investment,
Exactly.
not like a quick access savings account.
Right.
Okay, all right. So let's fast forward now, right? We've invested in this thing.
Yeah.
We've held on to it. We've been making our payments.
Right.
We get to the end of the contract period.
Mm.
What happens then?
Well, you have some choices.
Okay.
You can choose to renew the contract
Okay.
for another term, hopefully at a favorable interest rate.
Right.
You can convert your accumulated value into a stream of income payments.
Okay.
Like a pension, essentially.
Right.
And of course, you can always withdraw your funds entirely.
Okay.
Just take the money and run, so to speak.
All right. So some options there.
Options, yeah.
But is there like a default?
There is a catch
Okay.
if you don't make an active choice.
Mm-hmm.
The contract automatically renews
Okay.
under the same terms.
Okay.
So
Yeah.
you can't just set it and forget it.
So you got to stay on top of it.
Exactly. You got to be proactive.
Okay.
Stay engaged, make those informed decisions
Okay. Good to know.
as you approach that end of each contract period.
Right, because you don't want to just be automatically rolling over into something that maybe doesn't
Exactly.
make sense for you anymore.
Right.
Okay. All right. Now, I know that there's this death benefit
Yes.
that comes with this annuity. Tell me a little bit about that.
So the death benefit is pretty straightforward.
Yep.
Your beneficiaries, they receive the full accumulated value
Okay.
without any penalty, without any surrender charges.
Okay.
But there's also this spousal continuation feature.
So spousal continuation. Okay.
Yeah, that's pretty unique.
Yeah, I was going to say, that seems like a pretty big deal.
It's a big deal, especially for couples who are planning for their long-term financial future.
So how does that work?
So if the spouse is the beneficiary,
Okay.
they can essentially step into the original owner's shoes
Okay.
and continue that contract
Oh.
as if it were their own.
Wow.
So they get that same balance of growth potential
Okay.
and downside protection.
So it's like the annuity just keeps going?
It keeps going, yeah. It provides that ongoing security.
Wow. Okay. So that's a huge benefit for couples,
Huge benefit.
especially as people are living longer these days.
Yeah, absolutely.
It's like another layer of protection
Exactly.
for the surviving spouse.
It's about peace of mind
Yeah, absolutely.
for both of them.
Okay, so before we wrap things up here, let's talk about the company behind this product,
Okay.
EquiTrust.
EquiTrust.
What kind of reputation do they have?
They have a pretty solid reputation in the financial world.
Okay.
They're known for their financial stability, responsible investing practices,
Okay.
which is important when you're talking about annuities.
Yeah, you want to know that the company that's backing this thing is going to be around.
Exactly. You want that sense of security.
Yeah.
And EquiTrust, they score well in that area.
Okay. Good to know. Good to know.
So they're a solid choice.
Yeah, and just to be clear, for everyone listening out there,
Yeah.
we're not endorsing this product.
No.
Specifically,
Not
right?
one at all.
This is just one option among many.
Many, many options.
And retirement planning it's a complex thing.
It is. There's no one-size-fits-all solution.
Yeah.
You really need to consider your own circumstances, your goals, your risk tolerance.
Exactly. And talk to a professional. Right.
Absolutely. Talk to a qualified financial advisor, someone who can help you navigate all these choices.
Yeah, because there's a lot out there.
There are.
Okay, so to sum up, right, this EquiTrust MarketForce Bonus Index Annuity, it's offering that blend of market participation with some downside protection.
Right.
And, there's some flexibility there.
Some flexibility.
And some attractive benefits.
Yeah, some things to consider for sure.
Yeah, but I think the bigger question, the question that everyone listening needs to ask themselves is, does this balance of risk and reward, does it fit into my overall retirement plan?
That's the key question.
Yeah, only you can answer that.
Exactly.
So do your research, talk to a professional, and make the choice that's right for you.
Absolutely.
All right. That's going to do it for this deep dive.
Great talking with you.
Yeah, thanks for joining me.
You too.
We'll see everybody next time.